Yeah, hello guys. This is analysis on DRB. So looking at Digimon Rabbit, we are on the weekly chart, and obviously this is a trend. This is in the downtrend or bear trend. Yeah. So my analysis is Digimon Rabbit is likely to go down to this blue line level with a value of 0.000 and then 369. I mean the blue line level here. That is where I expect Digimon Rabbit to get to. So why am I expecting that level? Well, anything can happen when it comes to crypto. It can happen that the market might reverse right on this order block here to move up. But I hold a higher assumption that it's likely to get to the blue line level down here. Okay, so let's go to and once actually this here. That is a bearish engulfing candle, right at the top here. And that indicates that the market is likely to go down more and will be in a bearish trend for some time. So let's go down to the a daily chart. Okay, let me zoom out a little, right? So looking at our daily chart, this blue box we have here was an order block that needed to be filled. Right. Let me delete this arrow. Right. And as you see, when the market dropped down, it moved up but didn't get to the order block. So obviously there was a liquidity void between the order block and the top of this high. The market dropped down again and then this time moved up again. When it got to this level, it dropped down and still the market didn't get to the order block. So as you can see, there are stops, obviously stops lying above this high and above this high. Right. So what the makers usually do is they make sure they clear the stops before they move to our opposite direction. Right. And why do they have to clear stops? Most retail investors have the assumption that obviously there should be I'm coming. There should be a horizontal line here. So they have the assumption that the market always retests a horizontal line, or let's say in this case, I'm coming. In this case, the market dropped down and then came to retest the resistance. When it dropped down, it came to retest the resistance again. So obviously, there are people who will sell at this point and put their stop loss right above it, and there are others who will still sell at the point and then still put their stop loss above it, thinking that the market is retesting that resistance twice and will then fall. Right. So before market makers will actually go to that direction, they will make sure that they trick investors and then take out those who sold at that level before they actually move into the direction they want to go into. Right. So let me delete our horizontal line. So there are stops lying above here. There are stops lying above here. And there's another stop here that needs to be cleared. And that is what the market makers obviously did. See, they cleared those stops into our order block. All right. So this pattern happening, this particular pattern happening indicates or give us the clue that the market would want to go down because we are trying to follow the footsteps of the big wheels or the professional market makers. Do you understand? I believe you're getting me right. Okay. And anytime stops are taken, the market moves quickly, right? The market moves quickly to take this low. So you realize this was a previous low. So in this case, the market was bullish, but then when the stops was immediately taken, market came to take this low, making the trend now bearish. Right. So this was the point. The market taking this low was the point the market turned bearish. So anytime the market turns bearish, you realize that if you draw a trend line, it will then be effective. So this is our trend line. Well, I don't usually work with more often with trend lines, but because trend lines work sometimes and at times too it doesn't work. It's better to understand how the market structure works and then you know how to go and then know where the market is likely to go. If you understand the market structure and what these market makers are doing, you always know when the trend is going. Yeah. So obviously the market is bearish and this is our moving average. You realize when this low was taken and the market came to retest, it quickly moved below. So the market moving below our 50 moving average, 50% moving average confirms that the market is still bearish. Right. But if you look at this level, you realize this particular red candle was an order block because from this red candle moved this high candle and it came, but you see it didn't hold. It violated that order block and moved up higher. And before that there is another breaker here. So this order block needs to be reused again. And this is what exactly happened. When the market came, it it hit the other block and then moved higher, and then it has broken through. Right? And if you look at the market, let's draw our horizontal line. See, you realize that the market retested that candlestick, this particular breaker here. There's another breaker here too. It violated it and is now retesting it. So anytime an order block is violated, the market comes down to retest it as an order block. And that is exactly what is happening. Right. And there is another order block here. Let me use our rectangle. If we should draw it, you see that anytime the market gets into an order block, the market reacts. And that is the same thing happened here. It dropped into this particular order block and then moved higher. Right. From this level, the market can go as high to retest our moving average, but I hold the higher, it has higher probability of coming down towards our dash line, our blue line below. One of the ways I use to project that line is using the Fibonacci tool. Because if you look at our weekly chart, you see DRB doesn't have enough structure here. There's nothing like market structure here. So the best you can do is to use the Fibonacci tool. That will guide you to predict where the market is likely to go next. But you see, anytime there isn't so much structure, I will always advise you that you dollar cost average. because anything can happen. And because this level, the blue level, is very close to almost zero, the market is likely to act funny here. The same thing happened with the Web 5 and then Digimon Rabbit and then Digimon World Grimmer. Yeah, the market will definitely act funny when the market approaches almost the zero level. It's either they are going to remove liquidity, and anytime they remove the liquidity, the market obviously will go higher, right? Because people are not investing or are not buying these tokens, so they would need to remove liquidity for the market to pump higher, so that they will still sell. There should be something there. As I've always said, when the chart is right, something will happen in the market to fulfill what the chart is saying. So let's see what Digimon Rabbit will do. But if I will, this is not financial advice anyway. But the level where Digimon Rabbit is now will be a good buy. Wow, yeah, it will be a good buy. If the market happens to come to our blue line, that's the point you should be very, very, very greedy. Because as it stands now, you don't know what the market is likely to do. Because it's getting unpredictable these days as the market approaches our almost to zero levels. Anything can happen. So you can put your orders here. It's not financial advice, but if orders are here, it will be a good level to be greedy. Yes. So this is where I expect. Okay, let's use our Fibonacci tool. If we use our Fibonacci tool and we project, you will realize that our 1.618 level is in the negatives. It's in the negatives. So what I usually do is when it's close to the negative, I will usually divide the bottom and then 1.6 level, uh, and then put my projection in the middle. Yeah, so this is what I will usually do. So uh, DRB is definitely coming down. It's likely to come down to our blue levels, but because of what the market has been doing, this level is almost close to zero. So the market is likely to act funny getting to this point. So if my advice I'll give, this is not financial advice anyway, but if you would want to buy, this level would be a good buy. When the market gets below here, towards the below level, to be a good time to dollar cost average and then be greedy. All right, this is our analysis on Digimon Rabbit. This is not financial advice, but let's see how the chat goes. Thank you very much. If you have not subscribed to the channel yet, kindly do so. And then don't forget to click on the notification bell for you to be notified of subsequent analysis I will be doing. Thank you very much. This is Kwakwa.